Hello traders and welcome to Explain the Charts. Today, March 3rd, 2025, we're diving deep into GBPUSD, analyzing both the latest news and the chart data to help you make informed trading decisions. Recent news indicates the GBPUSD has been rallying on the back of soft US ISM data and falling US yields. We'll be exploring how this is reflected in the charts. There's also focus on potential peace talks between Ukraine and Russia and the looming tariffs from President Trump, so let's see how these events correlate with the GBPUSD's recent performance. We will also analyze the technical aspects of the chart. Let's start with the daily chart to get a broad perspective. We can see from a far-out view some consolidation. Now let's narrow in on a particular range of candles to see what happened more recently. Looking at the daily chart between late October 2024 and now, the pair shows a fluctuating trend, bouncing between support and resistance levels. We can see a recent move upwards, likely correlating with news of weak US ISM data. Key resistance seems to be around 1.28, a level the pair tested in March before pulling back. Now let's zoom in further on the hourly chart for a more granular perspective. On the hourly chart, we can see more short-term volatility. The recent rally from the soft ISM data is clearly visible. It looks like the pair is currently consolidating around the 1.268 level. The 100-day simple moving average mentioned in the news around 1.265 may be an important level to keep an eye on as well. If it breaks above 1.27, this confirms a short-term bullish continuation. The 1.2630 mentioned in the news may be a higher low support. Let's drop down to the 15-minute chart to see how this consolidation is playing out in real time. On the 15-minute chart, the volatility is much more apparent. It seems like GBPUSD is currently trading in a tight range, making it difficult to execute high-confidence trades. Look for breakouts above 1.27 or below 1.26 to confirm short-term directional movement. Bank of England Governor Andrew Bailey's hearing on Wednesday could also introduce significant volatility into GBPUSD. On one hand, the upside impulse we are seeing might mean the dollar continues to be weaker, meaning we'll test resistance at 1.2700 to 1.2710 and potentially 1.2785. But the lack of buyer interest indicated on the 4-hour chart's RSI may mean any test is failed, and that support at 1.2631 and 1.2600 are tested. President Trump's tariff talks may also introduce investor risk aversion. To recap, key levels to watch are resistance around 1.27 and potential support levels at 1.2630 and the 100-day SMA around 1.265. A break above 1.27 increases the likelihood of a move towards 1.2785, especially if U.S. economic data remains weak and U.S. yields continue to decline. A drop below 1.2630 could signal a bearish reversal, testing lower support levels around 1.26, further enforced if Trump's tariff talks induce investor risk aversion. The Bank of England governor's hearing on Wednesday could be a catalyst for a significant price move, so keep an eye on that event. Remember to always use proper risk management techniques when trading. Thanks for watching Explain the Charts and happy trading!